now you're an assistant professor at MIT, and it's pretty clear based on your thesis and the early work that you did that you were going to have a very good career in math, and you did. So what got you interested in business at that same time? Because you continued to have an interest in it, didn't you?
Continue having an interest.
An interest in business.
Well, when I came back to teach at MIT, the first intersession, I went down to Bogota to visit with my friends and told them I was coming and I won't leave until we have found a business. And they found one while I was there and decided to partner up. And I knew they were very smart guys and they had a very good sense of business, which I don't think I ever had. And so they started this business. My father and I invested a small amount, and I had to borrow from everybody, but I did. And so that was the first thing. And then there was not much I could do about it, so I kept doing math. And but I actually, since I borrowed some money, I needed to pay it back, and it was there was a place in Princeton called the Institute for Defense Analyses, which was a very highly classified joint, and it specialized in cracking Russian codes and protecting our own. So it was under the auspices of the NSA, and they paid a lot for mathematicians. So I applied to them and got a job and enjoyed the job and was able to start paying down some of my debts because it paid maybe double what I was getting at MIT.
Wow.
So well, and I liked that place. It was interesting.
Now, you talked last week about some of the work that you did there, but one of the things that I wanted to ask you, and I didn't think it was appropriate to ask last week because the focus is on mathematics, did any of the work that you were doing there, any of the mathematical tools that you were developing, have any applicability to some of the work that you did later on in finance?
In a general sense, yes. Now, I didn't get into finance for 10 years after that. I left there in '68 and really didn't get into finance until the late-ish '70s. But I learned about computers. I learned about, the fun of coming up with some algorithm which might crack a code. Most of the time it didn't, but once in a while you were lucky. And I didn't know how to program at all and never did learn how to program, but they had programmers. But I liked the idea of developing algorithms, seeing them put on the computer and seeing, if it's going to work. So that experience was very influential when I went into the hedge fund business and then gradually started to make it systematic as well, as opposed to fundamental trading, which we did at the beginning. And so anyway, I was a mathematician. I was getting frustrated with some of the research I was doing. I worked on a problem for 2 years, didn't get anywhere. And it's never been solved, so you could see it was a hard problem. It's a good one, too. The South American business was beginning to throw off some money, so I had some money. And I thought I would start investing. And I had an interest in foreign currencies. I don't know why, but I did, and I read a lot about that. So we started, I got a partner investing in foreign currencies, and that did very well.
Now, was this before you left for Stony Brook, or?
Oh no, it was after I left for Stony Brook. I'd been in Stony Brook for 6 years by then.
Okay.
I went to Stony Brook in '68, and it was '76 or '77 that we started doing this. But I thought we could. I looked at the charts, and they looked like there was some structure to these historical charts that one could perhaps exploit. So I hired the best cryptanalyst in the world, a guy named Lenny Baum, who you may have heard of, the Baum-Welsh algorithm, the EM algorithm, expectancy maximization. He discovered that. So he came to work with me. And we built a little system, even though I was trading fundamentally at the time, seat of the pants sort of thing, which way there's the wind blowing. We developed this sort of primitive currency trading system. But we didn't actually put it into practice because one day Lenny didn't show up for work until the middle of the afternoon. And I should say that Lenny loved to read the broad tape. There was this tape, we called it the doomsday machine because it just clicked. This broad tape would roll all day long, giving the financial news of the world. And he liked to study that. He was supposed to be studying making systems, but he liked to read that tape. So he came in late, and I said, "Where you been?" And he said, "Margaret Thatcher has been sitting on the pound, and it has to go up." I said, "Oh, well, I wish you'd come here this morning." He said, "Why?" I said, "Because Margaret Thatcher just stood up." And Margaret Thatcher just stood up, and the pound is way up. He said, "How much is it up?" I said, "Well, it's up at nickels, 5 cents so far." He said, "It's gonna go up 50 cents, $1. Buy pounds, we should buy pounds." I said, "Okay, buy pounds." Sure enough, it went way up, and that was the last time Lenny wanted to look at any systems. He just felt his good intuition would be suitable, and we'd make a lot of money. And we did. We did, doing fundamental trading. We started a fund called Limroy, and the fees were 25% of profits, no fixed fee, which was, sort of a reasonable thing. And with Lenny as my partner, the first year, the fund doubled after fees, and the next year it multiplied by 6 after fees. So it had, 2 times 6 is 12. So everyone had 12 times as much money as they started with. And it was fantastic. And it was all fundamental trading. Still, I felt that, okay, we were lucky in certain ways. I'll tell you one good story about luck. Gold, which was illegal to trade, had become legal to trade. And the gold market, gold prices were going up. And we bought gold in the firm. We bought gold. We had a pretty big position. In fact, Lenny and I split the position. Half of it belonged to him in some sense, and half belonged to me. And it was at $200.50, and $250, and it got up to $300, $400, $500, $550, I think. I said, "Lenny, I think we should sell this already." He said, No, you don't know how far it'll go. You don't know how far it'll go. So I sold my half, and it kept going up. And one day it reached $800. And that day, I happened to be speaking to a friend of mine who was a stockbroker, but I was just chatting with him over the phone. And I said, "What's new?" He said, "Well, what's new is this. My wife went into my closet this morning and cleaned it out of all my old gold cufflinks and tie clasps. And she's now down selling it." I said, "Well, Dick, are you having financial difficulties? How come?" He said, No, But she's a jeweler, which she was, and she only had to stand in the short line. I said, the short line? He says, don't you know there's lines and lines of people selling gold? I said, no, but I'm very glad you told me. I hung up with him. I picked up the phone, which went right to the floor of the exchange, and I got Lenny to come over. And I said, Lenny, sell the gold. He said, no, you don't know how far it's going. I was the boss, and I said, sell the effing gold. He said, okay. And he sold the gold. It was $810 or something like that. The next morning, we came in and it was $820, and he was so mad. By the end of that day, it was $650. The market collapsed and went nowhere but down after that until it got back to $250 or $300. Not in a week, but it just collapsed. Now that was totally good luck. I mean, it was good that I realized if everyone is selling something, it may be a time to sell it yourself. But it was luck. It was just luck. So we did well, but I felt that this should be systematized. There should be a way to systematize it. And I brought in another mathematician, a very strong mathematician named Jim Axe, and to do fundamental trading, but he knew about that we had made this currency system, and he looked at it, and he got a good programmer into the firm, and he realized this system could work for all commodities, really. It was a pretty good system, sort of. So we started trading that system, and it did pretty well. And he did research and improved it. We were still fundamental trading, but that wasn't even going so well. I had gotten interested in venture capital to some extent. So this Limroy company was also starting to invest in startup companies, and Axe was running this trading. And at a certain point, the investors in Limroy, they didn't like this venture capital. They liked the trading. So I decided to break up the company, Limroy, and make a fund called Medallion. Jim Axe would run that fund, and we put the venture stuff into a liquidation-only fund. And actually, it ended up doing pretty well. So now we had the Medallion Fund, and everyone invested in the Medallion Fund from Limroy. And it did very well for about 6 months, and then it started losing money. And it was losing money steadily. Now, he and his team had developed a very complex system. And it had, I don't know, many dimensions in it, one thing or another. And I said, you know, I have to understand what this system is actually doing. And he said, it's too tough. I can't explain it to you. It had this bell and that whistle. So I said, come on, I'm just going to project this into the two principal dimensions and see what it looks like. And it was nothing but a trending system, plain and simple, trending. It had these other little geek things, whatever they were, but it was basically a trending system. And trending, which in commodities and currencies too, which historically was a very strong thing, had in the last several years just sort of gone away with no reason to think it would ever come back. So I said, we're closing the fund, and he was very annoyed, but I was the boss. So we closed the fund, And I told the investors we're going to do a study period, and we're not going to trade at all. Of course, we're not going to charge any fees. Oh, at that point, it was 5 and 20. It was a 5% fixed fee and 20% of profits. And everyone stuck with us. A few people redeemed, but everyone stuck with us. And for 6 months, and we brought back someone who had left the firm, and it's a long story, but we brought back this other very good guy. Axe left, and he and I, especially he had some ideas of much shorter term trading, not high frequency in and out in 5 minutes, but trading on a much shorter term. And he developed a pretty good system. And together, I helped him, and it got better. And after 6 months, we went back in business. Only systematic trading. And from then on, we never looked back. It was just went from strength to strength. And I hired a lot of scientists, bought a lot of computers, and over the years, the system got better and better and better.